Good day traders, welcome to this week's technical market overview. Today's an exciting day as it's also the first day of our trading competition. So all the best to all our participants. If you want to follow the action, you can do so at the official competition forum link in the description below. I'm going to let the disclaimer roll and I will see you back in the charts. We are now starting by looking at the US dollar to South African rand. So far, our double bottom scenario is playing out remarkably well, and as we can see how that double bottom will look from a larger time frame, we can see that the neckline is all the way up there at about 1568, and currently price has broken above our 4-hour 100 SMA as we've discussed last week, and is now comfortably trading above the $15 level or 15 Rand a dollar level. Currently also the support would be sitting at our weekly pivot, which is at 1490, with the initial bullish target at 1540, that is the weekly R1, and also coinciding with the new monthly R1, and then of course that neckline at 1570 would be our secondary bullish target. If price were to break back below the weekly pivot, that could see price move back into this consolidation range, and that would see price perhaps find some support in the area of 1467, where it will converge with that 4-hour 150 SMAs. We are now moving on to the EURUSD. So despite a brief rally last week, taking out the previous high of our right shoulder, the strong rejection that followed that move has now pushed price all the way back to the head and shoulders neckline at 1.205. In the process, it has now been forming what appears to be a potential bearish flag, meaning a break below our neckline could still see lower targets being reached. Initial target would be in the vicinity of 1.195 to about 1.193. That's our weekly S2 and monthly S1 pivots, and that would be the initial target for that bearish flag. And also we have our full head and shoulders target at about 1.182. So should that level then break down and we see price trade lower, that could then finally reach that full head and shoulders target at that 1.182 level. Here with just a brief look at the economic calendar for the week and the week ahead. We can see that later today we have the USD ISM manufacturing PMIs. Then on Tuesday, the RBA rates for the Australian dollar. On Wednesday, there's GDP quarter-to-quarter figures for the Australian dollar again. And then on Thursday, we have the OPEC meetings all day. On Thursday, the Federal Chair speaking later at the evening. And on Friday, there's quite a few non-farm employment change and unemployment rate figures coming out. And we are now moving on to the GBP to USD. Last week we mentioned that despite the very bullish trend, price seemed stretched with a correction to at least 1.395 quite likely, and as we can see, that is exactly what ended up happening, with that 4-hour 100 SMA and monthly pivot now being tested. If this level holds, more bullish price action could be expected. That could see price move to the range between our weekly R1 at 1.414 to perhaps our monthly R1 at 1.425. Of course, should that level not hold and we see price sell off lower, support would be in the area of our 4-hour 200 SMA coinciding with that weekly S1 at 1.379 towards a much bigger support at the weekly S2 at 1.366. And we are moving on to the Australian dollar to USD. After an initial rally that saw our second bullish target at 0.797 realized, sellers then stepped in and drove price all the way back towards support on that February pivot at 0.768. This is a very strong level of support, and we are expecting price action to perhaps recover slightly or correct slightly towards this area between our monthly pivot and weekly pivot. That would be in the range of 0.775 to 0.780. Of course, should price manage to break out from that level or from that range, we can expect bullish continuation to target the area between our weekly R1 at 0.791 to about, let's say, 0.795, which is the monthly S1. Of course, should price break below the current trading level, which is our support on the diagonal as well, that could target a breakdown of price towards perhaps that monthly S1 at 0.751. with some interim targets at our weekly S1 at 0.759. We are moving on now. We are looking at the NASDAQ 100. Last week saw a sell-off to the major diagonal support that was followed by a quick correction and retest of the 4-hour 200 SMA, which got rejected at 13,375. This level, of course, now becomes resistance with important price action currently being expected in the range between 13,070 to 13,170. That is approximately between our weekly and monthly pivots. The 13,000 level is now a very important level of support, and if lost, could see price head lower towards support at about 12,450. We are now looking at the DAX. After losing the 4-hour 100 SMA last week, price quickly saw a test of that 4-hour 200 SMA. Currently, our weekly and monthly pivot levels coincide on that 13,840 level. This, of course, is now resistance, with the next levels of support being between our weekly S1 at 13,625 and our monthly S1 at 13,485. That would be an area of support should price sell off down into this area. Of course, if price would be able to recover and especially close above our weekly R1 at 14,000, so of course that 14,000 level now becomes important. As it closes above that, could potentially see a rally all the way up to that 14,400 level, which is the weekly R3. And I'm just using a previous move as a measure for that same move in that bullish scenario. We are now having a look at gold, and we are on the daily time frame. Last week saw gold continue to trend lower with support at 1,750 failing on Friday, and is now targeting the lower support levels of somewhere between 1,700, which is around our weekly S1, and our monthly S1, which coincides with that major diagonal support line, and that would be at about 1,675. Of course, in the event of a recovery, we would initially need to recover back above that 1,750 line. And of course, then we have that little consolidation zone between the weekly and monthly pivots. And I'd say in order for us to get price bullish again, that 1,810 level would remain our swing line or swing level, and that could then see a break back above that upper diagonal, and that could then see a bullish move, but be patient and rather wait for that reverse. We are concluding this week's technical market overview by looking at Bitcoin. Last week we urged caution, seeing price were trading at relatively extreme levels, and after an initial break higher, we then saw a strong bearish reversal with price only gaining some support from that support area near the consolidation zone, which we also pointed out last week. Currently, price is contesting with that 4-hour 200 SMA. And also, interestingly enough, I do notice what appears to be potential head and shoulders formation. And if price breaks lower from this current level, it's possible that it could target the head and shoulders target near 32,000. And we can see that we also have our monthly S1 pivot at 32,250. Just considering a possible bullish scenario, if price manages to close back above the weekly pivot at 48,000, let's make that 800, that could then see price recover, of course. But yeah, let's keep an eye on that 4-hour 100 SMA as the price action there will be taken. That concludes our technical market overview. We hope you enjoyed this week's video. So until next week, this is John Jacobs for RMDTRADER. Remember to trade smart and trade successful.